What if the Bank of Canada's next move is no move at all again? And it is looking more and more like the Bank of Canada will hold its rates again when it reports later this month. So I do want to look at that story. Also today, home sales are up, but the forecasts are down. We'll look at that. If you eat meat, you're going to be interested in the lawsuit against Loblaw over meat pricing. And Donald Trump's attack on the Fed is again raising alarms on Wall Street. So let's start with the Bank of Canada rate decision. And the bank is likely to pause rates, it looks like, later this month. Since they cut interest rates by 1/4 point in March, the bank has held its key rate at 2.75% through April and June. And we've got the next decision due on July 30th. And economists are believing more and more now that the bank may pause further cuts, at least for the time being. And that's because job numbers, they surprised on the upside last month, and also core inflation is holding steady at around 3%. So when we think about it, the bank usually cuts rates to support the economy, but in this case, it's being cautious due to inflationary risks. I want to look at what a few key economists here in Canada are saying on this topic to help us formulate our thoughts. So I want to start with RBC's Frances Donald, and she says that it's worth considering whether the Bank of Canada rate cuts would actually help what's hurting in the Canadian economy. She argues that rate cuts aren't targeted enough to help struggling areas. She singles out Windsor, Ontario as an example, which is suffering under the tariffs, but also stimulating stronger regions like Victoria, BC. And instead, she believes that direct government support would be more appropriate. She does add that the bank has already delivered 2.25% in rate cuts over the past year, and that it's still working its way through the economy. She also says here, Canadians have been through a very serious affordability crisis, and this is a Bank of Canada that's likely going to lean on the side of wanting to prevent a second round. Now, Oxford Economics, they say that no more cuts are likely, though they're saying for different reasons. They're saying that they believe Canada is already in a recession, that inflation could rise to 3% by mid next year, and that's because of supply chain issues that are caused by the tariffs. And that makes the bank more likely to hold rates steady to avoid reigniting or resparking inflation. Not everyone is on the same page. If we look at BMO, they say that they still expect 3 more 1/4 point cuts by March of next year. But even BMO's chief economist, Doug Porter, he says, if you look at what the financial markets are expecting, and they're often a very good judge, at this point, they're really only looking for 1 more cut. Now, meanwhile, you have Stephen Brown. He's at Capital Economics. He thinks that more cuts are needed, given the high unemployment and weak economic output. At 2.75%, the policy rate he sees as neutral, so neither boosting nor slowing growth, and that gives the bank room to react in either direction as new data come in. So pretty much as this tells us here, it's a crapshoot out there right now as to what we can expect for the rest of the year. If these experts who have access to all the data, if they can't agree, it sort of just tells us how unpredictable things are out there right now. Now, I want to shift to housing. And according to the Canadian Real Estate Association, CREA, Canada's housing market is showing signs of life. Home sales were up 3.5% in June compared to last year. That's also a 2.8% over May. And that does suggest that the market may slowly be bouncing back. However, CREA says here that it has cut its forecast for total home sales in 2025, now predicting a 3% decline from 2024, with about 469,500 properties expected to change hands. Now, prices are also expected to drop. CREA is projecting that the national average home price will fall by 1.7% this year to $677,368. That's down about $10,000 from its April forecast. And that's even though we have seen some month-to-month stability in recent data. Now, CREA senior economist Sean Cathcart, he says, despite a chaotic start to the year, the latest data suggests the housing market rebound may have only been delayed by a few months. Now, one of the reasons that's given for the rocky start that we've had so far is trade war uncertainty. We've heard a lot about that, obviously. CREA is saying that the Canada-US tariff battle hit buyers' confidence earlier in the year, especially in key markets like BC, Alberta, and Ontario. Now, even with the recent improvements, CREA warns that we're not out of the woods yet. June's price drop of 1.3% year over year, that does confirm that there is some lingering caution out there, especially in the areas outside of Greater Toronto, which led much more of that recent rebound. Now, if I want to look ahead to next year, CREA now expects a stronger market in 2026. They're projecting a 6.3% increase in sales and a 3% rise in average price. But that rebound will depend on stable economic conditions, no new major shocks. Now, if you eat meat, this next story might interest you. But first, I do want to take a moment to thank Harvest ETFs for supporting this video. And as we've seen recently, the markets have rebounded. We're going to take that, no doubt about it, but there is still a lot of uncertainty. There's still risk in the market out there. And because of that, a lot of investors are looking for something more stable. And that's where utilities comes in. These are essential services like electricity, water, the natural gas that we rely on every single day. Now, the Harvest Equal Weight Global Utilities Income ETF, ticker is HUTL. This fund offers exposure to large cap utility companies around the world that provide stability, diversification, and reliable monthly income. Because it's global, HUTL does help to reduce geographical risk and regulatory risk as well. And with Harvest's active covered call strategy, the fund does generate consistent cash flow while aiming to lower volatility. In fact, HUTL has never cut a distribution, only increased it. And then we look at the growth angle. As we see the AI adaptation exploding, so does the demand for energy. Generative AI uses far more power than traditional searches, so utilities are going to play a critical role in meeting that demand, and that will create long-term opportunity. So if you're looking for a portfolio building block that has income, stability, and growth potential, HUTL checks all three of those boxes. You can learn more at harvestetfs.com. I will put a link in the description below. Now, the meat story I have today. A Manitoba woman is taking grocery giant Loblaw to court. She's alleging that the company routinely overcharges customers by including packaging weight in the price of meat and seafood. Her name is Iris Griffin. She's the plaintiff. She's alleging that the company routinely overcharges customers by including packaging weight in the price of meat and seafood. The claim here targets several Loblaw subsidiaries, including Superstore and T&T, and it accuses them of deceptive pricing and the fact that it violates the Canadian food regulations. So the lawsuit specifically claims that this issue has persisted since at least 2023. Griffin says her discovery began after she noticed her ground beef was 134 grams underweight, and she determined that the plastic tray that it came on accounted for the missing weight, and that meant that she overpaid by nearly 8%. She says they're making profit off the backs of Canadians, one plastic tray at a time. The class action here also alleges that Loblaw ignored complaints, media coverage, and even a report that was filed with the Canadian Food Inspection Agency. She claims that enforcement agencies relied solely on Loblaw's own assurance that the problem had been fixed. There was also a CBC News investigation earlier this year that backed up her claims. It uncovered underweight meat being sold not just at Loblaw-owned stores, but also at one Walmart and at a Sobeys. Now, Loblaw has responded. They've apologized. They've offered meat discounts at the impacted stores, as they call them, without identifying which stores those were. The lawsuit also accuses the company of breach of contract, misrepresentation, and unjust enrichment. And it also cites violations of the Competition Act and various provincial consumer protection laws. Now, if certified, a class action would seek general and punitive damages and restitution for affected customers in British Columbia, Alberta, Saskatchewan, Manitoba, Ontario, Quebec, Newfoundland and Labrador, and Prince Edward Island. The suit also seeks general and punitive damages and restitution for affected customers. Now, my last story today is U.S. President Donald Trump. He's once again going after Federal Reserve Chair Jerome Powell, and this time over a $2.5 billion renovation project at the Fed's Washington headquarters. Trump says, when you spend $2.5 billion on really a renovation, I think it's really disgraceful. An irony here is that Trump's own appointees, they reportedly pushed for more marble in the Fed's renovation plans, and now that marble is being used as evidence of extravagance. Now, Trump has suggested that the cost overrun is grounds for firing Powell, even though experts say that it would be unprecedented, deeply destabilizing. The risk, if this goes through, that if the Fed loses its independence, then financial markets could panic. That would lead to higher borrowing costs and, of course, slower economic growth. Now, Trump's frustration with Powell, that comes from the Fed's decision to keep interest rates steady so far this year. Trump wants aggressive rate cuts to boost the economy and reduce interest costs on federal debt. Experts are warning, though, that if Powell is fired, investors might lose confidence in the U.S. economic policy. That would push up bond yields, mortgage rates as well. So Trump's focus on the renovation may be a way to build a legal case, but Powell is likely to fight that, if it happens, all the way to the Supreme Court if necessary. That is all for today's show. As always, I say thank you so much for watching, and we'll see you in the next video.